All right, everybody, welcome back to the Exploring the Blockchain podcast, where we document our experiences of learning about the blockchain, interview guests and experts in the space, and keep you updated on the latest trends in the industry. I'm your co-host, Zane.
And I'm Josh. Today we're joined by Alex, who's going to discuss blockchain analytics in GameFi. Thank you so much for joining us today. Can you start by telling us a little bit about your background and what brought you into the Web3 space?
Yeah, absolutely. So my name's Alex Cooper. I'm from Vancouver, Canada, and right now I'm in San Francisco. Actually, my company sent me out here to do some business development. So I'll give you a little insight about my job. I'm the community manager. So what that means is I'm in charge of growing our socials. I'm growing the community, our Discord, our Twitter, our Telegram, as well as I got to make sure that our community members are happy and then always take feedback so we can improve our product to make sure our users have the best experience possible with footprint analytics. Recently I just got promoted now to North American BD manager as well, so that's why I'm in San Francisco here to meet some partners, and we're starting our next round of funding coming up next month. So I'm here as well to meet some VCs and hopefully I can secure some funding. So that's about me. I'm 26 years old and I've been with Footprint now for about 6-7 months. So that's really, really exciting. And what got me into crypto? It's kind of funny. I sold a car and I had a little bit of disposable income. And I was just like, okay, coinmarketcap.com. Go on there. I looked at the top 10 coins and I was just scheming, looking at the charts, no idea what I'm looking at. I just threw $500 in, and then I lost it all. So, it was really, really interesting. And then actually, I went out to Mexico for a month and quit my job. Reason I sold my car, moved out of my house, and then I came back and I was like, no job, no house. And I was like, what am I going to do? Well, I wanted to get an online job, and my buddy was working at Footprint. And he got me the in. And ever since then, I've really been taking the deep, deep dive into crypto, right? I mean, as being a community manager, especially with blockchain analytics, one of the requirements is you got to be able to understand those analytics. So I really took a deep dive in the last 6-7 months. I've been spending about 12 hours a day just deep dive on the Twitter scene, with our communities, going on our website, looking at new dashboards, creating charts, creating dashboards. So I think I really, in the last couple months, I got a good crash course on crypto. So yeah, that's about me.
Cool. Yeah, perfect. So maybe just now we know that a little bit about your background, maybe just a little bit about what Footprint does, why we need blockchain analytics, and why that whole thing is important.
Yeah, absolutely. So at Footprint, we're the all-in-one stop for blockchain analytics, right? So currently we have 17 chains parsed. We have over 1,600 GameFi protocols, 520 DeFi protocols, over 100,000 tokens. And we also have done over 1.1 billion transactions in the 9 months that we've actually been around. So it brings us to the next question. Why do we need this, right? Why do we need blockchain analytics? Well, you guys like to make money when you invest?
Everyone likes to make money, yes, of course.
Well, exactly. So with having these different metrics, these different charts, it really helps you make more informed decisions, right? Especially, let's give a great example of one of these metrics that we have for GameFi. We have user retention rate, right? So we can measure the people that have been playing since the first month it's been released, all the way to see if they're still playing now. Or we could even compare it month to month to month. Why is this important? Well, especially in GameFi protocols, having active users and onboarding new users is one of the most important things for GameFi games, or else it'll just crash, right? So if I want to invest in a GameFi protocol, I want to see who's still playing and what they have done month to month to either increase their retention rate, or maybe they made some bad changes or something and now players are dropping. Well, I want to look at this to figure out why. And if users are going up and users are keep playing, well, in my mind, that's a safe investment, and chances are the game is probably fun. So and then also let's take a look at last 6 months of token price. That's really great. Market cap, TVL. When it comes to NFTs, we like to do transaction volume because transaction volume kind of lets you know how much people are trading the or buying or selling the NFT, which is really really important, right? Or and then we also have other cool metrics like who's buying, who's selling, and who's holding. So if I'm looking into an NFT, I want to get something that has high transaction volume because the higher the transaction volume, the more likely the floor price is going to go up. So right? So this is sort of just some examples of why analytics are really important. But the main reason is it gives you a deeper understanding of the project and not off opinion, off of facts, off of the data, right? So it's really, really important just for investing and just to understand a protocol on a deeper level.
Makes a lot of sense. It was funny, you were taking the question right out of my hands. Why is it important? And this data really is helpful because it's like stocks. You can look at PE ratios, other different financials. This at least gives you some insight and understanding why you would want to invest in a certain project. My question for you is, why is footprint analytics different from other blockchain analysis tools?
Okay, yeah. So let me give an example for like Dune, right? Don't get me wrong, Dune is a great analytic platform for users. But when you go on Dune, if you want to make your own analytics, you need to know SQL, right? You need to know how to do SQL to create these metrics and these charts. Well, with Footprint, we've already parsed all the data, we organize it, and then we've made it so that you can actually make your charts and your dashboards without any coding, without no coding required. Use our drag and drop feature. If you're familiar with x-axis and y-axis, well, guess what? You can make a chart. It's really, really simple. And the best part about it is that it saves you a lot of time, right? If you're doing SQL and you're looking through all these thousands of lines of code for one metric, it takes time, man. It takes a lot of time, right? Having it already parsed and organized, you click here, you want to get market cap, well, you click this under token, market cap, bang, and you can make a chart in a couple minutes. Now, as well, what's more different about us? Well, currently, Footprint is the largest GameFi analytics platform out there right now with the 16 and 120 protocols, as well as we cover GameFi protocols across 40 chains. So we've done 40 chains, well, not completely, but we've had different protocols from over 40 chains on our platform. Now, when it comes to data as well, we have 17 public chains parsed, which is about 10 more than Dune right now, which is so just our wealth of data and the amount of data that we've aggregated in the last 9 months is just insane, insane. And here's the other thing too. Let's say, on our organized data set, we don't have a specific metric you're looking for. Well, just like Dune, we still offer you the chance to do the SQL queries as well. I mean, there's a lot of devs as well that like to get the data themselves and validate it themselves, which is nothing wrong with that. That's great. So we give both options for our users as well. And best part, it's free to sign up. You can sign up on an account free and you start making charts and dashboards, no problem.
That was a great pitch. I think you've explained kind of what your product does very well. Now let's sort of move on to who's going to use this. And I think, one of the things you talked about was it's great for GameFi. So let's dive into that a little bit. To understand who's even going to use this and what your analytics platform is useful for, maybe you can talk a little bit about what GameFi is, and why you're excited about GameFi and the future of it.
Yeah, absolutely. So, at the most basic level, GameFi is the combination of decentralized finance and gaming. One of the best examples of GameFi with the DeFi would be DeFi Kingdoms, if you guys have heard of that game before, where they took the element of staking and they made it a little bit fun, right? So, why am I excited about GameFi? Well, one main reason is there's millions of gamers right now, right? Millions of just Web 2 gamers chilling, playing League, playing Call of Duty, whatever, right? But here's the thing, right? Well, at least for me, here's my example. I play a lot of League of Legends. I've dropped thousands of dollars on League of Legends on skins, you know, packs, whatever. Thing is, when I'm done playing League of Legends, all that thousands of dollars is gone with the wind. It's gone with the wind, right? I can't do anything about it. It's just in Riot system. Well, with GameFi, you actually own your in-game assets, right? Which is huge, right? So being able to then, let's say you're done with the game, or there's an opportunity to sell your skin. Well, guess what? You want to get out, you can liquidate your assets in GameFi, and then you can go somewhere else. Instead of your money being gone with the wind, well, maybe you got a fraction of it back in your pocket, which is better than zero, right? As well as the fact is that, like, it's already been huge in Web 2. For example, World of Warcraft, buying gold, right? You buy gold in World of Warcraft. That's outside of the marketplace. CSGO, when it came to skins for the guns, people have been dropping hundreds, thousands of dollars on these gun skins. Or even RuneScape as well. All of these games, or Diablo is huge too. Diablo is huge for botting and selling in-game items on their marketplace. So the concept of GameFi isn't really super new, but now we're actually making more better use cases where people can genuinely actually make some money, right? And we're just taking the aspects of these marketplaces from Web 2 and we're just making it Web 3. But what I think right now the biggest downside or the biggest struggle with GameFi right now is the fact of the matter is making a game isn't easy, right? Most of these devs on the protocols, you know, they're smart contract developers, right? Or just some devs, right? They've never worked on a game before. And creating a game is one of the hardest things you can do. Now you want to combine it with DeFi as well. So it's a really, really difficult thing to merge and do well, right? I think one of the biggest downsides for GameFi right now and why it hasn't picked up is just because the majority of the games just aren't that fun. Let's be real. The majority of the games just aren't that fun, kind of feel more like a grind. But recently, based on our stats, in Q2, there was a ton more funding opened for new GameFi games by these AAA dev or these huge VCs, right? Like Gala Games, right? So in the next 6 months to a year, I really think GameFi is going to blow up because of the fact of the matter is we're just going to have better games, right? They're going to be fun to play. That don't look like something you get on Windows 96. Original Doom, So I think right now in the next little bit it's really going to explode. Overall, in the bear market, everything about GameFi has been down, except, funding is still going in. People are still funding these new games. So it brings a lot of a lot of hope for the future. And you know what they all say, in a bear market, we build. So yeah, that's how I think about GameFi. It's my personal opinion on it. Now, games that I have played that I really like, for example, have you guys heard of Splinterlands? That's it's kind of like a Hearthstone game. It's fun. It's actually fun, and I'm not making a ton of money playing it, but I don't care. The money is just a bonus to my fun that I'm having, and that's what I think a lot of games need to focus on more to get these new users and to keep these users playing day after day after day.
Yeah, I agree. People want to have fun on these games. Some people, obviously, their main objective of playing it is to earn money, but a lot, in order to get mass adoption, is going to be getting people who want to have fun on the game and then earn from it as a side. Can you go talk to us a little bit about tokenomics, what that is, and how it's important in understanding how you're going to make some money if you do decide to play some of these games?
Yeah, absolutely. So tokenomics is one of the most difficult aspects of any protocol. Doesn't matter if you're a GameFi game or what, right? Tokenomics and balancing your supply, your burn rate, everything like that. It's super difficult. Now we're adding a game aspect to it as well. It's very, very difficult for these devs. Now I can give you a couple insights from some research that we've done. So Let's talk about single token tokenomics. All right, there's three models for single token tokenomics: input USD, output game token, input game asset, output game token, or input token, output token, right? The thing with single token tokenomics is unless you have a steady supply of new users coming in constantly, it's going to crash and burn. And if it's so you get the FOMO, right? It goes up and up and up. People are playing for the first week, everybody's happy. Then all of a sudden the next week, everyone's like, this game kind of sucks. So people stop playing. The word gets out, the game's not that fun. So the people that invested at this token price right here, right, at the high, well, all of a sudden no one's playing anymore. Game crashes, right? It gives you an irreversible death spiral, and that's how people lose money and rug pulls happen. Did you guys know single token tokenomics is the most common tokenomics structure for rug pulls, right? So then we have our next structure. We have dual token tokenomics. So where they give you the in-game asset and then you also get a governance token. All right. So then you can reinvest your in-game tokens into your government tokens so you can get more say, you can stake. So it gives more flow into the economy to prevent such a going up, right? Because it actually you reinvest back into it, gives it more value instead of relying on more people to come in. Well, you just rely on your current users to have fun and reinvest, so you can get these rewards like the staking. For example, on Splinterlands, they have SPS tokens. With SPS tokens, you get a certain percentage, or you can stake them, and then you also get a certain percentage of rewards every day. And then with SPS tokens as well, you can enter tournaments for real money, like $10,000, $20,000, $100,000, if you reinvest these SPS governance tokens into the tournament. So it provides a bit more complexity to the tokenomics, but it makes it a bit more stable. Don't get me wrong. This model as well, it still can fail, but at a lot lower rate than a single tokenomic game.
Interesting. So one of the major concerns that I hear a lot of people highlight about things like GameFi, about especially in this type of market where you've seen a lot of tokens really crash, is what you just highlighted. Is you need this new influx of users to keep a token healthy. And people say, oh, like all these tokens that are crashing, these are Ponzi schemes because if it can't survive on its own and it needs new users. So I think the difference you cited there is important, which is the difference between the single token versus the other thing you mentioned. So does that not happen with that new, better system you mentioned? Can it survive on its own?
So actually now, like, games are starting to come out with three tokens now and stuff like that. Now, I haven't looked too much into triple token tokenomics, so I can't really answer. But what I want you guys to take as the main takeaway from this is really be wary of games that have just one token. Okay? All right? Take a look at the first week of the game coming up. Look at that FOMO. See how it's going. See how many people opted in the first week. Okay? After that first week, see if it's going down. And there's nothing wrong if it goes down, right? Because what devs have to do is devs then have to put their own money back into the game to stabilize the price, right? A lot of devs don't like to do that, right? I already made my money. I got my cake. I'm gonna eat it too. See ya. But there are protocols that do that. So even if it's a single token and it starts to go down, you can see by the charts if the devs are really supporting their game when it starts to crash. If it goes back up, maybe they made some new changes, made some updates. It's really just important to see how much the team is really dedicated to their protocol, right? So it's always good to see if they're doxxed, right? You want to make sure that the team, who's working on the team, right? You want to make sure that on the team there's a game developer, right? I'm not going to play a game that doesn't have a game developer from a AAA studio, right? It's important, right? So having like these two things, right? Making sure the team's docs, making sure that there's an actual game developer on there, and and then take a look at the white paper as well, right? Look at what they're promising. Does this seem realistic? What have they already accomplished on their white paper with how many users that they had? Now they have this big step. Is that reasonable? Can they do it? Does it make sense? So taking a look at these three kind of things will really help you get a better understanding of like the team and the game, and to see if it's really got the support of the team behind it, right? So, so that's what I would say. Well, you should do that with every single GameFi protocol, but especially with the single tokenomic games.
I want to play a little bit of devil's advocate here. Obviously, GameFi blends blockchain and just gaming itself, but a lot of gamers don't like NFTs. They don't see why we need this extra aspect to our game. So, will we ever see gamers warm up to NFTs? Um, what do you think we need for mass adoption?
Yeah, absolutely. I think I think we can, and I think there's one major step that we need to do first, and it's just education, right? And I also think it's really important for new games if they want to get this Web 2, is you need to have a low barrier of entry, say be able to sign up with an email and a credit card, okay? Sure, when that's involved, there's a little bit of KYC, kind of gets rid of the whole aspect of the decentralized nature, but it's for onboarding, right? Everybody hears, NFT scam, blah blah blah. Why would I get into it? Blah blah blah, right? Well, with a little bit of education, right, and ease of access, it people won't be like that anymore once they start to understand, right? And I think with NFTs too, once gamers understand that you can actually sell this and make money with it. And we use these real comparisons like League of Legends skins that are literally worthless. But I spent 20 bucks on it, but it does nothing for me back. It gives me no ROI, right? When you get an ROI, when people understand that, hey, I can play this, it's fun. But if I want to say, like a better word, fuck it, I'm done. Well, I can sell it. I can make this money. So I think, and two, another aspect of NFTs that I think gamers would really like is the rarity aspect of it, right? We already see in loot box common, uncommon, epic, legendary. Well, the same sort of thing is prevalent with NFT traits, right? There's different traits that have a lower percentage of having on your NFT. And having that rarity aspect as well brings up more collectibles. I think gamers as a whole are generally into collectibles. They like to collect things, right? So once we put that rarity aspect into their mind that, oh, I got this trait that only 1% of anyone else in the game has, and then they see the value that comes out of that NFT for having that trait, I really think it'll really open up a lot of people's eyes.
Cool, excellent. I mean, hey, Alex, that's all we have for you. Thank you so much. I think you did a great job explaining GameFi, tokenomics, and really talking about a whole lot of things. If you have anything left to say, any closing thoughts, please go ahead. Maybe you can tell people if they want to find you, where they can find you at, and otherwise, we'll close it out here.
Yeah, absolutely. So, I mean, if I convince you guys to try out Footprint, well, go to footprint.network, sign up, create an account, and then you guys can start creating your own metrics, your own charts, your own dashboards without any coding, which is great. And it's I'm gonna keep it real, guys. At first, I tried it out. I was like, and then I started having fun. Yeah, it was kind of fun. I was having fun making these charts and the dashboards, right? As well as follow us on Twitter at footprint_data. And then you guys can keep on top of all of our latest dashboards that our community members have made, as well as any announcements. As well, stay tuned. We got a huge GameFi report being released August 15th that we collaborated with CoinMarketCap with. So stay tuned for that. That'll be really, really exciting. And I'd love to share it with you guys. Other than that, that's pretty much it. If you guys are in analytics, give us a follow. Hit me up.
Cool. Thank you so much, Alex. We'll talk to you soon.
Yeah, talk to you guys soon. Thanks.